morning, this is Meir Valensky with Driving Markets. I hope you can hear me because I'm not driving my car. Quite simply, the engine's gone. It's done 50,000 miles. It's 3 years old, and now I've got to pay 7,000 quid to get this car a new engine, which I haven't got the foggiest idea what they're talking about. And they asked me, has the car been serviced? I said, yeah, it has been serviced. This last 3 years, no, it hasn't been serviced. I said, what do you want me to do? I take it to the mechanic. He says he's serviced it. That's it. Well, it hasn't been serviced, so everyone's arguing with each other. So now I don't have a car. I've got this little car, so I have to excuse me. Hopefully, Driving Markets will be the same quality as it is in the previous car. I'm not sure if the car has a part to play with it. Anyhow, let's look at what's happening in financial markets across the world. So yesterday, the US shot up over 1.5%, 1.4%, 1.6%. On the back of what? On the back of the lowest unemployment figures in 50 years. Now that is a great boost to the economy. Think about it. You've now effectively got full employment in the US. You've more or less got full employment in Europe and in the UK. There is a shortage of labour. There's advertisements all over the place. Vacancies, come and work for us, come and work for us. However, this is going to have a major or potential major boost on the profits of companies, because when someone's in employment, obviously they're going to go out and buy the goods. So the markets liked it, and they see that future profits, as far as these companies are concerned, will be rising on the back of full employment. Let's take the other side of the coin. Now, normally what would normally happen if you have full employment, you have fears of inflation, but inflation's already here. This inflation we have is a supply-driven inflation. There is a lack of supply. The supply chain was completely disrupted as a result of Corona and continues to be disrupted as a result of Corona. So take that into account. You take, for example, a classic container. So a classic container of goods before Corona would cost around about $2,000 a container. Today you're talking about $20,000. I have mentioned this in the past, and it's worthwhile mentioning again. So the cost of a container has gone up tenfold. Well, obviously that's going to feed through to prices. So you've got full employment, you've got supply-driven issues or supply-driven inflation, and you've also got after effects of the pandemic with some shutdowns, etc., etc. You've got geopolitical issues, which is the war in Russia and Ukraine, which having a big impact on the price of oil. In fact, oil fell slightly yesterday, just to be aware. That's a bit of good news. So we're in a position where, on the one side, the economy is doing very, very well. Think about it. You've got full employment, the lowest unemployment claims in 50 years, then the economy is doing well. So if you were to take out the geopolitical issues of Russia, Ukraine, and you were to remove the supply chains, we'd have a booming economy globally. Everything would be booming. Now, that geopolitical issues and those supply and those inflation fears are retarding the market. They're holding back the market from moving forward. But the actual health of the economy is very, very good. So those people who think I speak negatively all the time, the health of the economy is in a very, very strong position. Probably the strongest it's been, as we stated, in well over 50 years. So where are the fears? Where exactly is causing the volatility? What is the concerns? Okay, so there's several concerns which may be real or may be just fears. Number one is the geopolitical concern of what is Russia going to do with Ukraine. I mean, there's a tragedy because the amount of loss of life, whether soldiers or civilians, is just crazy. Remember, a soldier is still a human being. So when soldiers are killed, it is still a human being being killed. And there's an untested limit as to where Putin will go regarding this particular war, and he doesn't want to lose face. So you've got the geopolitical factor, which is causing a bit of nervousness. You've also got the pandemic. Every few months comes out a new variant, and China's just had a shutdown, and now there's a new variant out in the marketplace. So economies and central banks are worried about or concerned about, is there going to be any after effects of the pandemic? Possibly. And then the most important factor is you've got the economic factor, which is, as I said earlier, the inflation fears. If inflation continues to rise and begins to erode the real true value of money, then that will impact on the regular, everyday individual consumer who's out there in the street. So be aware of that. Those are the three main factors. Each one has its own particular arena of justification, of explanations, but overall, you've got a mixture of economic and geopolitical issues, which is having an impact on markets up and an impact on markets down. But if you look overall, we haven't really moved in the last 2 weeks, more or less around about the same levels, because each investor and each analyst is looking where will the next big move come. All right, so it all depends mainly on inflation and interest rates, in my opinion. Unless something catastrophic happens between Russia and Ukraine, I think that's already taken into account financially and economically, but you've got to look at where inflation and interest rates are going. Cryptos have crept up a little bit recently. I'm a big buyer of BTC, of Bitcoin. I'm also a big buyer of GBP, the pound. I think the pound is going to benefit from an increasing interest rate regime in the UK. So I would say now to look to accumulate and look to go long on GBP versus some other currencies. So that could be a good one to go for. I'd say oil's going to go above $150 a barrel. But saying that, the economies look pretty healthy, and those people who are bulls and looking to me as what guidance, I would say, yeah, the economy looks pretty healthy. However, there are some major concerns there. My overall gut feeling is still we're talking about a trend downwards. So I don't want you thinking that I've changed my tack, but in the short term, there could be some upward movement in regarding stocks, shares, and Bitcoin and commodities. So take a view on that, take a look at it, and good luck. So this is Meir Walensky with Driving Markets. I hope you liked today's show. It's turning into a show. You can contact me on LinkedIn, on WhatsApp, on YouTube. You can subscribe, you can like. My likes, again, are really low. They're not many, there's about 20 likes, which is really very disappointing. And let's see if we can get this Driving Markets global. Have a good day, have a good weekend. Speak to you soon.